Peter Cardillo is the chief market economist for Rockwell Global Capital. Joins us live with some more analysis. Peter, thank you very much for joining us. You know, if I didn't look at the headlines for the past week, I would have thought the economy was creating more jobs. I would have thought the U.S. housing market was recovering, and I would have thought that the European situation was becoming more settled, if you will. What happened?
Well, you know, there's no question that the housing market is definitely turned around and has made a bottom, put in a bottom, and that we are on the road to growth. However, there are still a lot of unsold homes, and that bulk of inventory certainly at times makes its presence felt. So it's in a recovery stage, in a growth stage, but a very modest one at best. As far as Europe is concerned, obviously, you know, a lot of progress has been made. There's no question that the Eurogroup has taken some serious steps forward, and I think that they will continue to work on them, and eventually they will have a more unified group. I think the question is, of course, that continues to haunt the markets is Spain. And Spain obviously is still working on a plan to eventually ask for a full bailout. There's no question that that's going to happen. But unfortunately, I think the political situation is so unsettled that it's holding back the present government from moving forward with that formal request.
Peter, I want to get to politics in just a second, but I also want to ask about something that's been in the headlines. And it's not a new thing. 63% of S&P companies have either missed basically top-line revenue estimates. And this is a concern because the third quarter, which the companies are reporting, gives us an indication of what happens not only in the next quarter, but also in 2013 as well. Should investors begin to worry that maybe this optimism of growth that we've been expecting into 2013, maybe are we being too overly optimistic?
Well, there's no question that growth has slowed in terms of corporate earnings, but I think, you know, what we're seeing here is really the multinational corporations that are basically reflecting the slowdown in global economic activity and currency transactions. By and large, if you look at the earnings that so far that have been reported, ex the multinational corporations, most of them have met market consensus and in some cases even beaten them. There's no question about that. There are still uncertainties out there, but remember that corporations, whether they are multinationals or whether they are just domestic companies, are flooded with cash. And that just means that at one point or another, when the uncertainties are removed, that they will be out there and they will begin to invest.
Peter, that brings up a very good point. You talk to a lot of institutional investors, and there's talk about, I heard earlier today on another television network, how last night's debate between Romney and President Obama affected perhaps today's market sentiment, and that might affect what happens in the fiscal cliff later on this year. I don't know if there's any merit to that, but to the clients that you're talking to, what is their number one reason for not putting more cash to work in the equity markets?
Believe it or not, besides Europe, it's the domestic political situation. It's quite obvious that, you know, we're in a very tight race right now. The polls are indicating that Obama and Romney are neck to neck. And certainly, the markets are beginning to feel that now. And I think part of what happened in today's stock market may be a reflection of the polls. So there's no question that we're seeing not only investors holding back, but corporations are holding back because of the uncertainties of the elections. Now, you know, if Obama should win the elections, then obviously we'll continue to have loose money, and that probably will continue to put a floor in the equity markets. However, if Romney should win, the initial reaction obviously would be quite favorable. But traditionally speaking, the first year of a Republican victory usually means a negative stock market. Why? Simply because the elected party seems to have to clean up the mess that's been left behind. And I'm referring obviously to the fiscal cliff
All
as
right,
well.
Peter. I'm afraid we're out of time. Peter, thank you very much. We'll see what happens with the election. Of course, we'll know in just under 2 weeks. Peter Cardillo, thank you very much, Chief Market Economist for Rockwell Global